Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. In a week of busy economic data and monetary policy decisions from 8 central banks, investors turned cautious. Wall Street weakness quickly enveloped global financial markets, and indices in Europe, Japan, China, and India extended weekly losses. Stock market indices on Wall Street decidedly lost momentum after the Federal Reserve signaled slower decline in rate cuts in 2025. The possible shutdowns of the U.S. federal government weighed on the market sentiment as lawmakers struggled to raise debt limit and pass a spending bill. In Europe, market sentiment remained negative amid weak economic growth outlook and ongoing political turmoil in Germany and France. Stock market indices and the yen in Japan were under pressure after the Bank of Japan's rate decisions and inflation update. Let's start our weekly review with key U.S. economic updates. The Federal Reserve lowered the Fed funds rate by 25 basis points as widely anticipated and signaled slower rate cuts of 50 basis points in 2025 compared to 100 basis points estimated in September. The Fed revised its GDP growth estimate in 2024 to 2.5% from the previous estimate of 2% in September, the unemployment rate to 4.2% from 4.4%, and PCE price inflation to 2.4% from 2.3%, respectively. The Federal Reserve's revised outlook put investors on alert that despite 11 rate cuts over 2022 and 2023, stubborn inflation is well anchored and harder to cool to the Fed's target rate of 2%. Well, I meant to say despite 11 rate hikes. The Personal Consumption Price Index in November accelerated as expected. The annual PCE price index increased to 2.4% from 2.3% in October, and the core index, which excludes food and energy, held steady at 2.8%. The inflation report provides yet another confirmation that the Federal Reserve's policy is not restrictive enough, and longer the Fed waits, harder it will be to bring down inflation to 2%. Moreover, prices are still rising, though at a slower pace than in 2022 and 2023. But consumers are feeling the pinch as wage gains always lag the inflation. U.S. GDP growth in the third quarter was revised to 3.1% in the third estimate from the previous estimate of 2.8%, partly driven by upward revisions to exports and consumer spending, partly offset by downward revisions to private inventory investments. U.S. retail and food services sales accelerated to 3.8% in November for the third month in a row and from 2.9% in October, reflecting steady wage growth and resilient consumer spending. Existing home sales advanced 6.1% from the previous year to an annual rate of 4.15 million homes. Home sales rose at the fastest pace since June 2021, and more buyers returned to the market as the economy continued to create new jobs. Single-family home sales advanced 5% to a seasonally adjusted annual rate of 3.76 million in November, up 7.4% from the previous year. The median existing single-family home price was $410,900 in November, an increase of 4.8% from a year ago. Passenger car sales in the European Union struggled to advance in November, reflecting higher interest rates and cost of living. Car registrations fell by 1.9% from a year ago to 0.86 million units, and France led the way with a sharp decline of 12.7%, followed by Italy with a fall of 10.8%, while the German market stagnated slightly with a rise of 0.5%. Among the 4 major economies of the European Union, only Spain recorded positive growth with an increase of 6.4%. For the first 11 months of 2024, passenger car registration edged up only 0.4% to 9.7 million vehicles. The Bank of England held its policy rate unchanged after wages and inflation rose at a faster pace in November. The central bank highlighted high level of uncertainty, rising geopolitical tensions, and weak business sentiment, but suggested any changes in the interest rate will be gradual. The inflation rose for the second month in a row and advanced to an 8-month high, driven by the steady but high service inflation at 5%. The Swedish Riksbank lowered its benchmark policy rate by 25 basis points to 2.5%, meeting investor expectations, and the central bank signaled possible additional rate cuts if the outlook for inflation and economic activity remains unchanged. The Norwegian Norges Bank held its reference rate steady at 4.5%, a 16-year high, citing elevated inflation, and the central bank signaled that policymakers are open to possible rate cuts from March. The Bank of Japan held its policy rate around 0.25%, the highest level since 2008, citing that Japan's economy is on a moderate recovery driven by improving corporate profit and business spending, but the growth in industrial profits and exports is lagging. The policy committee estimated annual consumer price inflation to range between 2 and 2.5%, driven in large part by service inflation. The Japanese yen lost ground after the Bank of Japan's rate decisions. In other economic news, China held its interest rate steady and property investments fell sharply and retail sales rose at a slower than anticipated pace. China's new home prices continue to slide to the 17th month in a row amid a lack of demand and worries about the health of the real estate developers. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.5% after the Federal Reserve signaled slower rate cuts in 2025. Texas crude oil prices decreased 3% to $69 a barrel and continued to slide, driven by a stronger U.S. dollar and a weak demand growth outlook from key customers in Asia. Natural gas prices in Europe rebounded to €43.50 per megawatt hour amid growing speculation that Central European countries may not be able to support the flow of Russian gas in the new year. The euro dropped below $1.05 and traded near a 2-year low following the strength in the dollar after the Federal Reserve signaled a hawkish rate outlook in 2025. The yen weakened to 155 against the dollar after the Bank of Japan delayed its rate hike till 2025, as the central bank wants to see more evidence of wage hikes before adjusting its interest rate policy. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite closed down after the Federal Reserve estimated slower rate cuts over the next year amid resurgent inflation. European markets halted a 2-week rally amid ongoing political turmoil in Germany and France, rising trade tensions with the U.S. and China, and weak economic consumption growth domestically. The Nikkei 225 stock average halted a 2-week rally after the Bank of Japan held short-term interest rates steady and tracked losses in the tech stocks in New York. Hong Kong and China indices turned lower after the latest economic data confirmed deflationary trends, and policymakers showed little urgency in announcing details of the previously announced fiscal stimulus. Indian market indices dropped sharply after foreign investors continued to lighten their holdings amid valuation worries and slowing economic growth. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. FedEx Corporation increased 7% after the parcel delivery company reported its quarterly results and announced spinning off its freight business. Nike declined 5% after the athletic shoemaker reported a decline in sales, and the newly appointed chief executive said a turnaround will take time amid intensifying competition. Micron Technology plunged 16% after the advanced chip maker's outlook for the current quarter fell short of market expectations. Lamb Weston Holdings dropped 17% after the frozen potato maker reported weaker than estimated quarterly results, and the company estimated sales weakness to persist over the next 2 years. Darden restaurants jumped 14% after the Olive Garden and Longhorn Steakhouse restaurant chain operator reported better than expected fiscal second quarter results and lifted its annual outlook. Software One Holding jumped 11% after the Swiss cloud service and cybersecurity services provider announced a deal to acquire Norway-based Crayon Group Holding for $1.4 billion. Honda Motor and Nissan Motor initiated preliminary merger talks that could involve additional Japanese vehicle makers amid fast-changing global marketplace and rising competition from Chinese electric vehicle makers. Vivendi jumped 36% after the French media company completed the spin-off of Canal Plus, Havas, and Louis Hachette Group. ThyssenKrupp Nucera jumped 14% after the German electrolysis company reported record quarterly revenues for its alkaline electrolyzers. In the week ahead of light data flow, the U.S. investors are looking forward to the release of durable goods orders and new home sales updates. In Europe, the U.K. is set to release GDP growth, and Spain is scheduled to announce producer price inflation and retail sales data. In Asia, Japan is set to release retail sales, industrial output, and consumer price inflation for the Tokyo area. Reserve Bank of India is set to release its foreign exchange reserve data. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next week.